All right, welcome back. This is Open Exchange, live from the CNBC-TV18 Motilal Oswal studios. There's 2 minutes into the pre-open session. We should have the rates up quickly, take a look at what this is looking like. It's a much anticipated opening, market open. And I think, it's just that the open itself is important, but I think what happens through the course of the day is equally, if not more important. And then I guess the close will be very keenly watched as well, because a lot can happen through the course of the day. The pace at which information is coming to us. For example, last night you had the Adani response, a big sort of document with response to the Hindenburg report. This morning, we already have a response to Adani's response. And of course, I think we'll hear more. As the Adani CFO also said, they're confident that without any change to the price, the FPO will go through. Maybe we'll get details on that as well in terms of when the subscription numbers, etc., are updated. For now, it's a flattish kind of start, but changing quickly, down 60 points, 1/3% or so. Sudarshan Sukhani is with us, and so is Mitesh Thakkar to take us through how they are going to approach things. Gentlemen, good morning. Good to have both of you here. Sudarshan, it's going to be tricky to say the least, but what's your sense?
Yeah, good morning. See, we have been talking about that trading range which has been developing for almost 1.5 months. That support at 17,800 broke decisively on Friday, and there was a trade on the downside. After contraction, there is expansion, and we are expanding on the downside. I'm just saying there was a trade on the short side which was identified before the markets fell, because when that level was broken. Now, support comes somewhere around 17,400. That doesn't mean the Nifty has to go there or stop there, but it does mean that the markets have not given us a sign that they are reversing today. So with so much confusion, today is not a day when we want to trade. Nifty can easily slide towards its support level, or it can stop and start looking for a rally. And there is no clarity. So for me, there is no trade in the Nifty today.
Okay, so the Nifty is a no-trade zone, got that. Well, let's get Mitesh Thakkar into the conversation as well. By the way, the pre-opening rates are settling in now. Do watch out for a couple of these stocks like Bajaj Finance that delivered a good set of numbers. The entire Adani group will be in focus as well. Mitesh, good morning. Would you also concur that this is probably a no-trade zone given big events upon us? And what are the stocks you're watching this morning?
Good morning. My sense is that I think the Nifty, is slightly on the negative side. But what is important is that we have the union budget coming up. Now, the breakdown level for the last consolidation was 17,800. Before that, it was acting as a good support area. And yesterday, rather on Friday, we started trading below that. So if that is not being captured, I think we'll maintain a negative bias. Only, if we start getting past 17,800, would we then look at closing down our short positions or exporting fresh long. So the idea is to trade with slightly negative bias, and today's 30-40 point kind of pullback, won't be very strong enough to change this declining trend.
All right, Mitesh, yes, boss, we're not going to see even that 30-40 point pullback is what the pre-open rates are suggesting. In fact, the SGX Nifty was suggesting a pullback, but the Nifty is down 40 points. Let's see where this settles. Mitesh, but what about the picks for the day?
Yeah. So on the stock side, I have 2 buys and 2 sell. ITC was something which was doing very well on Friday, and the short-term charts are very positive there. So keep a stop around 340, look for a target of around 358 to 360 on the upside. And the other stock which did very well was on the back of numbers was Tata Motors. That's a buy as well. Keep a stop at about levels of 435, look for targets of 465. And 2 stocks on the sell side. IDFC First Bank on a mild pullback around 56.25, 56.5. That's the level to short. Keep a stop at 58. Look for targets of 52 here. And M&M Finance is a sell with a stop at 231 for targets of 214.
Okay, by the way, there is a recovery in the Adani Group stocks, Adani Ports, Adani Enterprises, all in the green after the rebuttal that the management came out with and the clarification that they will go ahead with the FPO. All the stocks are seeing a bit of a recovery. Sudarshan, your thoughts on this? Would you touch any of the Adani Group stocks either way in terms of a trade? And if not, what are the other stocks you're looking at on your list today?
See, there is news, and the stocks have declined significantly. While I don't know about myself, but there is a buying opportunity once this decline ends. Then when these stocks start building a base, then they are probably certainly worth investing in. I'm not talking about a one-day trade. Amara Batteries is a buy with a stop under 565, one of the few stocks that actually went up on Friday and also building a base for the last 1.5 months. Ashok Leyland is a buy, another outperformer. So, Sonia, the problem is after 2 days of large declines, it's not easy to go short in stocks. At what point you go short, even the slightest intraday rally can stop you out. So I'm going with the longer trend of the market, which is up, and looking for outperformers. So Ashok Leyland is a buy with a stop under 145. BPCL is my only intraday short, stop above 350. And finally, Petronet, another sustained uptrend there, is a buying opportunity because of the dip with a stop under 222.
Okay. By the way, I just want to mention that Data Patterns is a stock that's really charging up now. Vahishta was telling us a while back how the numbers of Data Patterns is very good. It's a 10% up move that we're seeing in pre-opening. So a lot of smaller numbers, good numbers are getting rewarded in the markets today. Granules is another one. It was a mixed set of Q3 earnings actually. The revenue growth was not bad, 15%, which was well above the single-digit growth that was expected. But the profits mistreat expectations. The company also saw price erosion of 12 to 15% in Q3. It's likely to continue into the next quarter. Krishna Prasad Chigurupatti, the chairman and managing director at Granules India, joins us now to talk about that. Mr. Chigurupatti, first on this price erosion issue, which has been, a niggling worry for the industry and for your company for a while now. You said that there was a price erosion of 12 to 15% in the quarter gone by. Where do you expect it to settle? And more importantly, by when do you think this price erosion issue would be behind us?
Good morning. The price erosion of 10 to 12% was compared to year on year. But if you see quarter on quarter, last few quarters we have seen it come down. And to me, it looks like this quarter is going to stabilize and it seems to have bottomed out. I don't expect any more price erosion going forward. At least for our products, I can speak confidently. But the performance, we could have done much better in Q3 compared to Q2. The main reason was we were not able to sell our products because we had problems with our 3PL distribution.
Keep techies.
But we could not sell them. And the main loss there was around 28 crores on the EBITDA. Otherwise, we would have done better in Q3. So more than price erosion, it's a failure to supply penalties and not being able to deliver products that has hit us on a Q on Q.
Okay, got that. All right, sir. So good to hear at least you're not expecting more price erosion in the US for your products. Give us two numbers then. Since things are on the mend, your margins have improved. Do you expect the margins to improve from here on as well? And the last reported debt is to the tune of around 850 or 900 crores because of the buyback you have done. Where does that number headed? Do you continue your deleveraging strategy, margins and debt? Go ahead.
Okay. Margins will start creeping up. That's what I always said. It's only a matter of time. This quarter, we could have done much better if not for certain issues. They will keep going up. I'm not saying they'll drastically improve, but they will definitely go up. And coming back to debt, the main reason for debt going up is one is the buyback. And the other thing is we have also taken up new initiatives in terms of green production using green energy, a major initiative for Granules. And on that front, we had spent about 98 crores for purchase of land. And we started investing into that. And this is in addition to our regular capex. So about 98 crores of new capex, and also the 310 crores that has gone through for the buyback, close to 400 crores. In spite of that, we have been we've been generating a lot of operational cash. Last quarter itself, we did 161 crores of operational cash. So, and we expect it will improve. And definitely by the end of the quarter, end of the year, we will see positivity in our debt reduction.
Got that. We'll leave it there today. Short conversation, but you'll understand there's a lot going on, sir, and we'll have you back again for more. The market is, let's have the rates up, please. The Nifty and the Bank Nifty. Banks, of course, is clearly the more weaker of the lot, and it'll be important to see how that one behaves. Bank Nifty, I think 39 something. The level to watch on the Nifty Bank is 39,970. We are at 39,856. 39,970, which I put out in the morning also, is the 61.8%, the golden retracement of the rise from the September 22 lows to the all-time highs of that index. And we are now kind of treading water under it. Sudarshan and Mitesh are with us. Mitesh, any thoughts on that level, on the Nifty Bank?
Yeah, I think the level is definitely there because it's a simple retracement area. But I think a couple of other things, Prashant, which I will give a lot of weight to, will be the position of the indicators and the averages. And the last week's candle, if you look at it, and the weekly candle I'm talking about, the Bank Nifty started at 43,000 plus levels and ended at 40,000 level. Big red candle with pulling down all the indicators, which means that this week there could be some pullback. But unless until we see a very positive news flow by the budget and we see the Bank Nifty getting past 41, 200, 300 zones, I think this will be a stock or an index which will be under a lot of pressure and we'll see lower levels.
Okay, just wanted to mention that a lot of the Adani Group stocks are still under massive pressure. Adani Power, Adani Transmission, Adani Total Gas, Adani Green are all down about 10 to 15% in pre-opening, so don't lose sight of that. Sudarshan, just a word on how you would approach, if you would approach these stocks at all. What should the best strategy be? Complete avoid, or is there any kind of move that you would initiate on the Adani Group stocks?
No, there's no trade because it's too volatile for trading. But once this dust settles down, almost at lower levels, almost all of them are investment opportunities. That takes a little time, but then be patient.
Hey, be patient. We forgot that we have a budget upon us as well. So this is the time for our CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. So without wasting any time, here's today's question. What percentage of the expenditure in the budget FY23 was allocated to defense? Your options are A, 7%, B, 7.4%, C, 8%, and D, 8.7%. Send us your answers on Twitter. Post your answers as a comment on the question tweet on @CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Hurry and send us your answers. Remember, we'll announce the winner at 3 p.m. today. We are heading into the market opening in about 40 seconds from now. So just a quick word in from Mitesh as well. Mitesh, you think this 200-day moving average of 17,300 is something that can hold?
I think that looks like at least being tested a very strong possibility. I think budget is obviously a news-heavy event, so it can change the direction in the short term. But looking at the chart setup today, I think 17,300 looks like to be a very achievable and a target which the index would do and possibly even lower.
Okay, that's actually bang on time. That's the opening bell kicking in right now. The first tick is on the downside for the market, so down almost about 40 odd points. There is still some caution in the system. The Sensex is down 220 points as we open up trade. So after the 3-month low that we hit on Friday, there is still some more selling pressure in the market. The pressure is coming into the Bank Nifty this morning, down almost 300 points on the first tick. And all your big private sector banks are under pressure. Axis Bank, ICICI Bank, HDFC, Indices are all exerting pressure on the market. L&T, by the way, comes out with numbers today. It's down about 1% ahead of its earnings. Reliance Industries is dragging its feet, down about 1%. HUL, Apollo Hospitals, M&M are a couple of other stocks that are trending in the red now. Now the Nifty is down 100 points, so a disappointing opening if you're a bull. The Adani Group stocks are all over the place, actually. Adani Enterprises and Ports are in the green, so there's a bit of a recovery there. But the rest of the pack, Adani Wilmar, Transmission, Power, Adani Total Gas. In fact, Adani Total Gas, I think, is down almost. Adani Green Energy, by the way, is down 17% right now. Total Gas is down 18%. So massive, massive slide is what you're seeing in many of the group stocks, despite the clarification that came through from the management a while back. More on that in a bit. I think that's the sentiment overhang on the market, definitely. There's no respite now. In fact, it's quite a steep fall that we're seeing on the index. The Sensex is now down 530 points, and the market breadth is well in favor of declines, with over 1,400 stocks on the declining side. So clearly, despite a clarification coming through, there is this overhang, as the management themselves was telling us. There's a $30 billion gross debt they're sitting on, out of which $6 billion is the exposure that they have to the Indian banking system, which means effectively 20%, little over that, is exposed to the banking system. So there's definitely some amount of caution there in the system. Not a good opening for the market.
Well, that's right. Not a good opening for the markets, but from the Adani Groups itself, Ambuja Cements and ACC, both of them have opened up in the green. Ambuja Cements is up close to around 5%. Remember, to recover 10% in Friday's trading session or so. Let's see whether or not that holds. Remember, the management clarified that there's no pledge out there and they're committed to the fund infusion. So that explains why that stock is running away. ACC as well, giving it company on the upside. And Adani Enterprises is up close to around 8%. So mixed start out there. You have BEL. Well, that stock has opened up with some pressure. The margins were down 170 basis points. So that's taken a bit of a knock in trade. You have Kajaria Ceramics as well. The volumes declined by close to 1%. The high fuel costs impacted margins. The hope is going ahead, you see some bit of improvement on the margins, but that stock is down close to around 5%. Aarti Drugs, profitability was down by 40%, margins as well compressed by around 360 basis points. So that one comes up for you on the screen, down close to around 5%. On the flip side, NMDC had opened up in the green. They have increased prices by around 300 to around 500 rupees over the weekend. So good news coming in there. I think the initial tick was in the green, but now it's more or less flattish. And data patterns, the management that we'll be tracking within just a bit, well, that stock had opened up well in the green. That should come up for you on the screen. And Phoenix Chemicals as well, it's gone up multiple times in the past few years. That had opened up in the green, I think, but let's see what that one's doing. So quite a bit of stocks moving around. For starters, though, the Nifty has gone ahead, broken Friday's low, and currently holding at around 17,450. If we have to bounce, we need to bounce to somewhere of these levels. Otherwise, a visit to the 200 DMA, which is 150 points lower from these levels, is on the card. So 17,450. Let's see whether or not we can hold on to these levels.
Let's just look at the Adani group stocks once again. Let's just have them one by one, the intradays. Let's start with ports, which I think opened in the green, opened higher. And then we kind of move on to the other names. Ports is up 5%, 626. We were making that point on Friday as well. At one point, Adani Ports was down 24-25% mid-afternoon on Friday. It closed about 10% off the lows. I mean, at least in terms of assets, in terms of just familiarity with investors, etc. This is the oldest, the most big cash generator for the Adani Group, and it's visible in terms of the price reaction. I mean, I have to say, in a way, it may still look bad, but it's more discerning. I mean, it's not everything down kind of a day for even within the group. But let's have the others up as well now. So this is Ports, Adani Enterprises, the holding company. Will come up. Ports power is down 5. Enterprises, where the FPO is on, should come up next, and then we'll look at the other 2 or 3 names. Enterprises is also up about 5% or so. Adani Green, Total, Transmission are some of the other names where there is significant selling pressure. 19% down on Total. Adani Transmission and Adani Green are down about 15% or so whereabouts. So there is a fair bit of pressure, but the one difference is that there is within the group, with ports being up, I mean, I think you could say that markets being a little more discerning with what is going on. 125 points lower on the Nifty, 17,486 is what we have as we begin another trading session. Gautam Shah is with us. He's founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thank you very much. With the significant selling we've had, I think price levels, etc., have broken. A lot of sort of averages that have come under pressure. But what about indicators themselves? Simple things like the Nifty RSI or RSI across a bunch of stocks. What I'm getting to is the market getting a little in the oversold territory in the very near term. What's your sense?
Good morning, Prashant. Well, I think markets are far away from turning oversold. I think if you look at it from a traditional standpoint, what has really played out over the last 4 to 6 weeks is not a plain vanilla correction. I think what has happened in the last 1 week, the foundation to the same was laid in the month of December, because I think the market went through a gradual transition phase. It was a sort of a distribution phase. And even when I was on your channel in the first week of January, there was just no optimism on the charts because the market kept correcting from resistance levels. And thereafter, the news flow just followed, because I think this break below 17,800 was just a formality. Many of the technical indicators had indicated to the same, and it's just played out, beautifully over the last 4 to 5 weeks. If you look at the technical data itself, the momentum on the downside have been far greater than on the days when markets have seen upside. The leadership was not there. I think I mentioned last time that banks and Reliance, the 2 big pockets of the Nifty, were looking very weak on the chart. So what would have actually taken the market higher? I did not have any names. The overall bar quality, the fact that you had some trendline breakdowns, the moving averages broke, and the fact that India has been one of the biggest underperformers in the last 6 weeks. So all of this just alluded to weakness. It's already played out, and I think it's going to get worse before it gets better, because there are no signs of bottoming out of the charts. And my numbers on the downside, I think for the very near term, 17,250 to 17,300. So that's where some of the technical studies have coincided to indicate some support, and you have the budget in a couple of days. So maybe the market finds some support there. But I think eventually the chances of a deeper cut is quite high. And on the upside, 17,800 and 18,050, till these numbers are not crossed, we would maintain our bearish stance.
Just a quick word, guys. Look at the market, right? We're down
all over
just 20 points. I mean, just like that. All the significant losses, 100 plus points, it's all disappeared. The day's high now, by the way, we are at the day's high, and the market is in a very powerful way coming back almost into the green. And this is what I was talking about. The open is one thing, the SGX is one thing, but the real action will transpire in the trading hours today. And this is, I think, the first of, I guess, many moves we are seeing. We are back almost in the green. Will we come back into the green? Let's stay with that. Almost 15,600 is where we are at. 15,603, by the way, is the day's high now already. So this is quite amazing. The close on Friday was 17,604, and we came within 1 or 2 points of turning green. And all of this happening very, very sharply. Let's put up Reliance Industries. I think that is the one which has come up very, very sharply from the day's low. It's up in a very, very powerful way. The intraday will tell you that. I think that's 11-12% weight in the index, making all the difference to the overall market at this point in time. Sonia.
It also speaks about how volatile this market has become, right? With so much news flow thrown at it. So it's almost a 1% recovery in the first 10 minutes of trade. 17,446 was the low that we hit. We're back above 17,600. There are, of course, pockets of calm in the market as well. So just look at something like a Bajaj Finance. It's now your top gainer, up 3.5%, post a good set of numbers. But then again, within the Adani group, there are extremely diverse moves. So really volatile market. Gautam, good morning. This is perhaps one of the most challenging times, right? Because you have this overhang globally of perhaps a recession coming through, interest rates are moving higher, and then locally things are very sticky with all the news flow. You mentioned this level of 17,250 to 17,300. If that breaks, which is the 200-day moving average, what is the next level that you're watching out for on the downside? And is that your base case scenario? And who do you think could be the leaders in the next level of the downtick of the market?
So yeah, we need to realize that the markets have already seen a lot of weakness. 18,900 has become 17,450 today. So that's almost a gradual and even a vertical kind of a drop. And therefore, we were very slightly oversold on maybe some of the very shorter term indicators. But if you look at the daily and the weekly charts, as I said, there are no oversold signs. And while 17,250, 300 could be a stopover point from where you could possibly see a bounce, I think eventually a break of the same and a move towards 16,900 and maybe lower is quite possible. And you need to understand that this has just become an India-centric fall at this point of time, because global markets are all very steady. US markets, European markets, Asian markets, all quite steady in the last 4 to 6 weeks. And if you look at the ratio charts of India versus the world, we have been in this downtrend. Now, the big question is whether world markets start and correct in line with what India has done, or India will eventually bounce back and, be in sync with the world. I think the former is going to play out, because on the Dow also 32,500, 34,500 is a sort of a range. And if the Dow were to correct from those upper ends, then I think there could be weakness for global markets as well. So I'm just not too optimistic. As you rightly said, it's a very volatile environment, given all the news flow around the Adani group, the budget, recession, etc., etc. So I think this is going to continue for some time. It's going to be a joyride both ways. But I think the takeaway on the charts is that we are in a downtrend and rallies will get sold into.
All right, we have a bit of a relief rally that's underway. The Nifty is up close to 180 points from the low point of the day. The Nifty Bank as well. Just take a look at the U-turn out there. So there is some bit of an attempt to see a relief rally at best. As Gautam has been saying, and BLs as well have been pointing out, that the recent support, that will be a bit of a resistance, which comes in at around that 17,750 to around 17,800 odd mark. However, risk reward has favored a buy today at the day's low. Let's see how this pans out. Well, Gautam, you're clearly sounding a little bit skittish. This relief rallies could get sold into. What about the Nifty Bank? That's taken a harder knock. There was this consensus trade out there that the Nifty Bank is going to do well. The banking stocks are on their way up, fundamentally, technically. That's come to around 40,000 odd. What's your view out there? How much lower can that one go?
Yeah, it's actually a very big fall that we've seen in the last 1 week. 1,000 points for 2 consecutive days is something that we've not seen on the Bank Nifty for a very long time. And to be honest, the charts have spoiled completely because, the Bank Nifty was the poster boy index for 6 full months. June through December 22, this was the index that actually propelled the entire market higher. And we've seen over the last couple of decades that when the banks do well, the market is safe. When the banks don't do well, the market is just not safe. And even at this point of time, I think there is room for more weakness. Our working target on the downside was about 39,600. And I think we got close to that today morning. And that's probably the reason we are seeing this bounce. But I think if you look at the weekly and the monthly charts, there is clearly a lot more room on the downside. So rallies will get sold into maybe another 1.5% upside. But thereafter, I think 39,600 is likely to break, leading to a move towards 38,500 and below. And many of these top stocks, which have done so well in the last couple of years, ICICI Banks and the Kotex and the Axis and the SBIs of the world have all developed weak charts on the weekly and the monthly time frame. I don't think this is going to get sorted in a hurry.
Gautam, I have 2 questions. One is, so your slightly medium to longer term view on the charts has changed? You flipped from bullish to bearish?
Well, Prashant, we live 5 years in 3 months. That's the way life has become on the charts. So, you have to be very agile. You need to be nimble-footed. I still want to maintain a bullish stance from a longer-term perspective. But if I have to take a view for the next couple of quarters, I would want to believe that this market is not headed significantly higher. I think we are going to be in a range, or we are going to, see gradual moves on the downside from time to time. So longer term, I think the India story is intact because I think that doesn't change. Corrections can come and go. But short to medium term, clearly there is a lot of pressure. And this India underperformance of the last 6 weeks is something that we've not seen in 3 years. We've not seen since the time we started recovering from March 2020. And that's not a good place to be in. And I also want to believe that a lot of positives based on which India tested 18,900 is now in the price. And the negatives are not discounted. When you have developments like Adani, and if you have any move in global markets, recession, etc., I think that could really impact Indian markets.
Okay, just a quick word on, because we're heading into the next discussion, which is on the auto space. Autos are one pocket that have come out after a long lull period and now showing some degree of outperformance. Do you think in this entire, this sort of volatile environment, will autos be a hiding place, both technically as well as on the fundamental side?
Well, I think for me, number one is IT. I think I spoke about it last time as well. I think I love the way the IT index has shaped up in the last 4 to 6 weeks. Look at what TCS and Infosys have done. Look at some of the mid-cap IT, Coforge and Persistent have done in this recent fall. No impact whatsoever. So I think IT is clearly looking like a place to hide. It's not that it's going to see a runaway rally. It's just that it's going to be in a sort of a range and it's not going to move in sync with the overall market. But as you also rightly said, I think auto index looks great. But I'm not very sure whether it can really, again, see a big rally. I think it's just going to get into a range. Many of these auto stocks have rebounded from support levels, whether it's a Bajaj, a Maruti, or a Tata Motors. So I think there could be some stability on the screen. But the problem is, at some point of time, autos and metals are very high beta. So if the market were to eventually go down and crack lower, I don't think they're going to be very safe. So if there are 2 pockets where I would strongly recommend to hide, that would be IT followed by PSU, and outside of the equity markets, gold and silver.
Okay, IT, PSUs and gold and silver. Of course, gold is one asset class that has been zooming, right? And while everyone's been worrying about what happens with equities, gold has steadily been gaining ground. Thanks a lot for joining us, though. That's a cautious view coming in on the markets. 17,200 to 300 is the next level to watch on the downside. If that breaks, then perhaps we're heading towards 16,900 as well. So a bit of caution is what Goldilocks has thrown up. I guess not a very Goldilocks situation anymore. But for the market, there's a big recovery that's come through. Just look at that. I mean, it's more than a 1% recovery from the lows, and the Nifty is now trending well above that 17,650 level. But Bajaj Autos...
Sonia, just one thing, sorry, apologies. There's 2 names, right, which are up 10% now. This is the reverse of what we saw on Friday. Adani Ports is up a full 10%. That should come up on your screen, 660 plus or so on that one. And then you have Adani Enterprises, which is also limit up 10%. So 3037. Of course, I mean, even with a 10% move, it is still below the FPO price, which I think, is slightly higher than where we are at. But this is turning out to be a bit of a reversal. Other names like Adani Green, which was around 18-19%, has recovered 8-9% from the lows. Adani Transmission has also come up from the lows. So this is a reversal on the other side. The market, of course, as you said, as a consequence of that, is up about 90 points. 17,694. It's a 270-300 point swing from the day's low that we've already seen. And this is the first, 15-20 minutes of trade this Monday morning. Sonia.
It's really been all over the place, right? Especially the cement stocks, Ambuja, ACC are both up about 10% after the clarifications from the management, the Adani Group. So just keep an eye out on that as well. We were talking about Bajaj Auto and how the third quarter numbers beat estimates despite weakness in exports. The company delivered record high EBITDA and margins also expanded for a second consecutive quarter. Rakesh Sharma, the Executive Director at Bajaj Auto, joins us now to talk about that. Mr. Sharma, good morning. Before I talk about the EBITDA performance and whether there's more upside there, tell us a little bit about the demand recovery. Are you seeing any recovery in the 100cc mass market segment? The rural market is expected to recover, but there are some signs of it, not conclusive though. Tell us from your end, what are you looking at? And in the 9 months of this year, you did a revenue growth of around 9.5%. What is the estimate for the full year and for FY24?
Good morning, Sonia. If your question pertains to domestic motorcycles, and indeed we are looking at a demand recovery post-festive. Though December retails were negative, but that's an aberration because, like I said before, when December is too close to the festive, we generally see that. But if you look at the quarter as a whole and also what we are seeing unfold in January, there is certainly a demand recovery of 3 to 5% in retail terms in the domestic motorcycles business. Though the character of this recovery, is almost completely and very strongly driven by the top half of the industry, which is the 125cc plus. That's now almost 50%. So that's growing at a above 20% level, whereas the 100cc segment is marginally above the negative zone, just in retail terms. The entry-level 100cc segment is negative, but just above that, the executive 100cc segment is positive. But the top of the industry is growing at 3 to 4 times than the bottom half. We expect that this dichotomy will sort of not be so sharp. It will narrow down a bit. But in this year, at least, this is going to be the story. The top half going faster than the bottom half, and hopefully the domestic market, motorcycle market growing at about 5 to 8%. We hope to beat that because we've got a very strong play, we believe, in the top half. And we've also made certain moves in the executive 100cc segment now.
Okay, so just a clarification, you're saying that there is the executive segment in 100cc, there's a bit of a positive move there. So can you say with any degree of certainty that the worst may be over in terms of the 100cc mass market slowdown, A? And this 5 to 8% growth that you're looking at for domestic motorcycles, that's for FY23, I assume. What is the expectation for FY24?
No, I made that comment for the next 9 to 12 months, as you had asked. The 5 to 8% industry growth that's the way we are sort of thinking the industry will move in the next 9 months or so. But going back to your first comment, yes, indeed, the bottom, we've turned the corner even in the bottom half of the industry. But I maintain that the entry level itself is still seeing very sharp negative declines. Just above that, which is a quarter of the industry, the executive 100cc segment is just sort of a little bit positive.
Good morning, Mr. Sharma. I don't know whether I'm reading it right, but this time around you're sounding a little bit more optimistic, and it seems to be rubbing off not just for you, but it seems you're a good luck charm for the markets as well. As you and Sonia were having those few questions back and forth, the Indian markets are up close to around 100 points. So let's keep that going. Let's focus on Bajaj Auto though. Margins, well, they've shown a bit of a recovery to more than 19% odd. More to go. Do you believe that margins in quarter 4 will be a little bit better, or can they hold at these levels in comparison to quarter 3?
Well, as you know, the overall margin at Bajaj Auto is a blended margin because there are 3-4 very different businesses. Half of the business is international, where we are facing headwinds, as you know. However, there we are helped by the dollar realization. So that's a positive. In the domestic markets, the good thing which has happened is not only is there a market recovery, but there are two other things which have occurred in our case. One is that our mix has become very rich compared to, let's say, a year back, in the sense that in the 125cc plus segment, which is the one which is leading the growth, we have today something like 20 models. Most of them are new in the stable. In the last 6 months, we have seen that they've been accepted by the customers. And that's a very, very comforting sign for us. There, our ASPs are higher, our margins are better, and they are, they've got the momentum right now. So we feel that in this top half, we are extremely well poised with our portfolio. So the ASP is going up and the margins will continue to improve. If the costs, the outlook, near-term outlook on the cost remains flattish, though we have seen some uptick in things like aluminium. But if we sort of consider that it will be flattish, then at a business level, individual business level, it is a good place to be in. And finally, the three-wheeler market continues to recover. The industry is recovered to 75% of pre-COVID levels. We are back at 100% levels. The CNG segment is growing very strongly on the back of 80 new pumps being added by the government every month. And it now is 65% of the industry. For us, it is 75%. We have an 86% share there. Again, over here, the ASPs are much higher than petrol and diesel. The margins are much better. So when you roll that in also, it looks like a good place to be in for us.
Okay. So this EBITDA per vehicle was at 18,000 rupees. It was highest ever that the company has recorded. But now as the rural market improves, as the 100cc segment improves, do you think the blended realizations may not be as high? And what is the average? What's the normal rate that you're looking at in FY24 in terms of EBITDA per vehicle as the rural market starts its improvement?
See, the higher end of our portfolio, which is 125cc plus, is growing at a much faster rate than the bottom end. In recent times, which is just in December, we have made a play by launching the Platina 110 ABS, which is the first 110cc vehicle with ABS, and that's getting very good traction because, as you know, safety is a very topical issue, and we are seeing a very good uptake. However, the portfolio in the 125cc plus is solid right now, and that will continue to outstrip the growth and also in terms of weight. So I don't expect for this reason the realizations to suffer. And when it comes to FY24, I would still say that we are watching the budget. We would want to look at how things unfold over the next 1 or 2 months before sort of firming up our view about how we should be, what we should be expecting in FY24.
Okay, so on exports, just one comment. I mean, it was still a over 35% fall that you saw year on year in terms of volumes. Is the worst over, and what kind of average run rate are you looking at in Q4 and in the first half of the new fiscal?
See, the worst is over as far as the impairment of demand is concerned. Because of a broad-based inflation in many of the emerging markets, in several categories, there has been a tremendous erosion of purchasing power, because of which demand started falling from August, September onward, as you know. But that has settled down now. We have calibrated our channel stock. So we took a greater fall in that period in Q2 in our shipments. And today we have calibrated our shipments to retails. In fact, in some places, there is a stock out situation. Demand is settled in. The one big uncertainty here is still Nigeria, which is almost about 20-25% of our international business. There is an impending election later this month. There has been a demonetization. So we expect, hopefully these clouds will thin post the elections, and by March or so, we will see some kind of normalcy going. However, the big uncertainty is now not being caused by retail demand, but by the availability of dollar for trading. The central banks in most of these countries have taken a very cautionary view of conserving their forex, as a result of which availability of US dollars for trading is not so easy, whether it's Bangladesh, Ethiopia, or even in some cases, some Latin American countries. Now, that is going to take time. Even if retail demand comes back, I think the ease of trading operations will still take time to happen. And probably we think that, by middle of this year, or let's say May or June, is when it should start to settle.
Okay, all right. Well, good speaking to you, Mr. Sharma. Thanks so much for stopping by and filling us in with your comments. Wishing you all the best for the coming quarter. For the time being, though, we'll slip into a short break. But on the other side, we'll get chatting with Mr. Rangarajan of Data Patterns. They'll be joining in to talk about the past quarter's numbers and how Q4 is shaping up. Later on, we'll also connect with Gautam Sarogi of Go Fashion India to discuss their past quarter's numbers as well as their outlook for the coming year.